Good afternoon. This is the Elliott Wave daily update for the NASDAQ 100 being recorded on Monday, November the 3rd at 3:22 p.m. Pacific Daylight Time. The markets actually did some moves early, like within our first half hour or first hour, putting in the high and the low for the session, and then proceeded to just trade inside of that for the balance of the day. Primarily today, as I stated when I was giving the S&P, I feel today was controlled by NVIDIA and Tesla. There were some auxiliary also contributing. In fact, Amazon was much higher than where it is. And so I think it was back about like 258-ish or so. And that was contributing some to upside moves. But there was a lot of contrary type moves, and that was coming in Apple, and Meta, and somewhat in Microsoft. So it was not evenly balanced. So we had a lot of push pull. And as I said there, and I'll state it again here, as a day trader, it's like, yeah, you got to really squeeze some stuff out, and it is possible. But the jerking around of the market is, I hate to use the word, but I'm going to do it anyway, getting old. And it is, of course, much easier to trade when the market decides to act as a whole. So in other words, the NASDAQ or the markets are being sold in general. Equities are being sold for specific reasons. There is a catalyst, there's an enzyme that's going to go out there, and it's going to happen together rather than sporadic and not even. So when we're getting into just gamma levels, and we're getting into options trading, and we're getting into watch trading, and where the liquidity is, of course, the liquidity is greater in stocks like NVIDIA and Apple and Broadcom, et cetera. Maybe not so much Broadcom, but it does somewhat get a little bit. But we have some really larger stocks that trade extremely heavy, of course, NVIDIA being one, Apple being another, Tesla just gets pushed around. So, and they're cap weighted. So therefore they have a little bit of a push and a pull within not only the NASDAQ, but that those stocks are also in the S&P. So to see the S&P, right, and against the NASDAQ, quite often it's the top 9, if not 10 stocks are tech. And within that, you pretty much got the Mag 7 on both indexes. So to have one small sector, 7 stocks, have this much control over rally and decline, it's a, you might want to say, is it a fair representation? Well, no, but yes, because it's what the market is doing. So again, I'm kind of hoping that we move back in to a period where the market as a whole is being pushed in a particular direction because of some stimulus, some enzyme, some action that's being taken by something that's going to affect equities, not just AI, not just the flavor of the day or the flavor of the month, or a stock that we know is heavily institutionally traded and heavily retail traded, i.e. Apple, i.e. Tesla. So until we get that, we're kind of stuck where we are. So let me just tell you where I believe and what we could possibly say, yeah, that could be done. But at the same time, I'm not calling it because the market is being very schizophrenic, so to speak. Now, so I'm leaving this count as is, where we have that minuet wave 3, and that would be at the high in the 29th, which was 26,399 here in the NQ. And from that, I have wave A of minuet 4. And then we're trying to work out and possibly complete a sub-minuet wave B of minuet wave 4. So tough. Can I call it there? Yeah, we sure did. We got up very close to that 100%, where wave C would be equal to wave 1. And can I put that into 5 waves? Yeah, I could squeak it out. Even if I went over here to the line chart, I can squeak it out. So yep, I got a 5 on the line chart. It didn't get quite up close to that 100%. It just got to touch the 78.6. So, and again, how valid is that lately? So going back over, can I say then that the B wave is done? I could, but here's the deal. If it is, where is it going? It's going in a down C wave, a C wave going down. Again, as I mentioned previously, the C wave's closest cousin in terms of Elliott wave is a third wave. They resemble one another, right? Where we get that big extended third wave. We get a power in the first wave and in the fifth wave, and the corrections are just, your basic flats, or they could be dynamic, but most of the time they're more muted than the move itself. So I'm looking for that, and that's to the downside, right? So because that's the action right now, I'm looking for a minuet fourth wave, and within that, I'd be looking for the C wave to kick in and start. And then part of the deal is like that minuet fourth wave needs to overlap minuet wave one to keep the ending diagonal in place and to actually turn it into an expanding, which would fit perfectly because of the space and what we're doing internally, and the fact that the volume's not great, and again, et cetera, et cetera. But what I'd be looking for after that is for the market to turn and to just beeline straight back up. So that I think we can do as well, because we're still going to be under basically thin. And it's not, I think we have to keep clear on what's happening up here in this new high territory. It isn't because the market is suddenly turning bullish. Trust me, I just don't believe that at all. And there are too many traders that all they're functioning on is the math. All we're doing is saying, well, I'm making money. I don't care what it does or where it goes. If I can put my trade together, then I'm going to do it, and I'm making the money. Or you're putting the trade on. So again, is to think, okay, we have renewed interest in the market. It's like, well, you might have renewed interest in a particular stock, and that might be coming because the options, or because it's gotten a call, or because of something on earnings, or whatever the situation may be. But it may only last till the expiration, and until the options come to fruition. Don't forget, and they're very tradable, and you can trade in and out and still make your money. So again, I don't want to place bullish or bearish around it. Although if we start to go up and we're heading for 27,000, that would be what we would consider a bullish move. But I'm not going to say that it's bullish factors backing it up. And what I mean by that is like, oh, we got another rate cut, or we have great earnings, or whatever the situation is that produces that, or our government's running on all cylinders, right? And they're getting work done. And we're seeing, an infrastructure that is actually working, that actually providing, that actually is doing something for the people that live in the country and the people that live in the states, that we're getting the services that we need. Instead of in other words, it's like, yeah. And that's not a utopian attitude. That's just like, hey, let's just get back to taking care of one another and having a fully operational economy, which we do not right now at all. So again, when's the next? Oh, and by the way, I'm sure some of you saw it, and that is the Hindenburg, whatever the deal is. It's like I saw it twice on the news wires today. The Hindenburg effect, or the something or other. And what they're basically talking about is how a high number of stocks make new all-time highs, while the same number of stocks make new all-time lows. Hence, they're not meeting somewhere. Hence, there's a disjointed something going on. And usually what that can then lead to is that the ones that are making new all-time highs can't hold on. They won't be able to stay up there. And they will also, then we all get into that move down. It's not saying that those same stocks might not turn around and go all the way back up, because under the current count, a fourth wave down, that would do it. We'd all go together. And maybe we'd see, NVIDIA dropped back to 195, dropped up to 190. It's just a big change. The options trade, positions change, everything gets going. We go through an expiration, boom, that's all done. Now we're ready. NVIDIA's earnings come out, or, whatever the situation is. But I think beforehand, we could just have a big wash. We can see this move, and it's not say everyone's turning bearish, or it's just no. Look at how the options are trading. Look at what's happening in these stocks. Are they overvalued? Is it that they got to come down because they're going to flip a position? So instead of the action being you've got to buy, Maybe it turns it around, and what's happening is everyone else is coming in to sell them back the calls that they just bought. And if they do that, then the dealer has to buy it. And then what's their action? Sell it. And if we get it deep enough and we start to break through, say, a volatility trigger, it changes the mindset, it changes the attitude, it changes the trade from risk on to risk off. And what is risk off associated with? Selling. You're taking the risk off. So you're selling. And so, again, so risk on trade is buying. And we think about what the dealer has to do. Then it makes sense. The dealer is the one, when it's a risk on trade, that is being responsible to make the market in these options classes all the way across the board and everything. But at the same time, they're making the bid and offer and the call. And if it gets heavy because we have a risk on trade, then what funds do and other traders doing, they're selling the VIX, taking the cash and buying the volatility of the internal underlying within the indexes, i.e. Apple, Amazon, AMD, NVIDIA, Meta, Microsoft, etc. And when we get something connected with earnings and we get a big switch in those options, you're going to see the market turn and go with, because of what the action is coming for the hedge of those trades. And if it's a risk off, then it's just a reversing everything they did. So it allows the dealers to sell long positions and take in a short. And so it's just a function of the market. But you're going to get the moves that you want to see. And they're not, we might get push pull for sure. But I'm longing back for the day where all the markets moved in sync with one another. And that only comes when it is a generalized market signal, not one for a particular stock, not one for a particular index, but in general, that we go through everybody's volatility trigger. We go through everybody's, call walls and put walls and large gamma positions. The market just dumps. And in this case, it would be within a fourth wave, and it can come down very quickly. And that's what I'm looking for. I'm looking for a quick move down. Wash your hands, we're done. And we pick up and we go all the way back again. All the way back again, folks, to new all-time highs. That's what I'm looking for. A quick trip in the NASDAQ back to 25,000. Not the end of the world. Not the end of the world at all. But it's going to take that to kind of clean things up, to get the arrangement going, to get the money shifted back and forth. So, and that's kind of what's going to happen in my mind. And it's not that I'm turning bullish, or it's not that I'm turning bearish. It's just what I see. And the pattern fits, and I see them building, but they're not yet willing to give it up. When we're seeing individual stocks, i.e. Tesla, NVIDIA today, being in control with some help from Google, with some help from Amazon, being in control of both the S&P and the NASDAQ. So when you get that, and then you got the push-pull going, because Meta got hit, Microsoft got hit, Apple got hit. So we had stocks down within this Mag 7. So it wasn't as balanced. It was just push, pull, and then we get this. Nothing. A nothing burger. It just sits in the middle and does nothing. So that's the story, and you can see how we almost got up there. It's maybe a slight failure because C's not gotten over A. But hey, I am all for it. And if I was going to put A, B, and a C in progress, 1, 2, it needs to go, and it just needs to keep going. Now, yep, we opened down a little bit, but we're still only down 28. S&P's down 550. It's got to go a lot further. It's got to go faster. I'm not saying it's got to do it right now, because we don't have a lot of things open. All right, so that's kind of the deal. I also feel that we can say is, if it's done, we got that action. If it's not done, let me take it back out to that hourly so we can look at it a little bit better. Then I don't want to put as an alternate like I have in the S&P that I can move this, shift this 3 over, put the 4 down there, and we still got one more little pop higher. That doesn't fit as well for me here in the NASDAQ. So that's why I'm not changing it in the S&P either. But if I had to have what we still have room to go up, it would be to get closer to 26,288, possibly as high as 26,337, 338. Do I think it can go all the way up here? No, I'm hoping that it doesn't, but I can't say that it won't. And that would be a C wave. And that would be in response to we've had, yeah, it becomes irregular. And it would be in the B wave. So A, B, and this whole thing keeps going. So it's interesting because you can see you can count the 5. But does it have a little bit more to do? Possibly. So no matter what, I still believe we still got to come down, and I think it goes very fast. Not going to share what's going to be the catalyst, but that's kind of my thought. All right, I am going to end it there, and the next update will be tomorrow morning. Again, my apologies for this morning, but I forgot to set my alarm, and therefore I woke up and it's like, oh, I got to make an update. Get your head together. So again, my apologies for that. Gemelas will be updated tomorrow morning, and the next update will be tomorrow morning.